or improving issuing ratings that are saying that the country's fundamentals has significantly gotten better. And the speed and the length of time in which it's taking to go from the default status to be in such a short space of time is really a lot of credit to the people who are managing the country. So basically, all the rating agencies are saying that Ghana is like a decent or stable place and a positive place for global capital to come and look at it. Again, um, DDP major creditors are now obviously restructured. There's a lot of work that has gone in. The country was able to save a fair bit of money, but now we've seen that like for the first time, the 7-year credit CD bond sort of what has been issued. We've been able to pay around $2.1 billion to Eurobond holders. So all of that has been like extremely positive to the country. A sinking fund has also been established to sort of help deal with the um, uh, huge debt that was maturing in like next year in 2028. But like from the budget, it was announced that like we've now been able to set up this sinking fund that will be able to use to clear that. Again, that is a lot of credit need to go to to the people running the country. Monetary and FX external factors. So NPR has essentially sort of come down from 27 to now 14. But the challenge there is that this hasn't fed to banks lending to the private sector or the real sector. And you know when you listen to the interview that the minister did with Bernard Ablay, I believe it was yesterday, the thinking is that like they're observing this thing quite critically. And at some point, the central bank might need to sort of intervene to help sort of improve on some of those conditions. But they're hesitant. They want the banks to do it by themselves. If you look at our level in terms of the real sector, sort of private sector lending, we're significantly below our peers. But in terms of the NPR side, actually, we've been heading in the right direction over the last 15 months or 18 months or so. Um, Again, we are seeing that commercial lending rate has come down from essentially in the 30s to now we're now at a point where we are now averaging around 16%. This is massively positive for lending in the country. GRR coming down significantly also has helped. CD have been, I mean, we've depreciated a fair bit this year. And that is a reminder that the structural deficit still exists in the country. In the sense that if you leave it on its own, the country is not at a level where the city is not at a level where it can sustain itself through supply and demand, right? So there's a need for some of the effects that the country generates to come back to Ghana to help support the country. Essentially, that's what Gold Board has been able to do. But we've still seen at least around 8% city depreciation versus through the Gold Board and that intervention, what we saw last year. So left on its own, the city is still going to depreciate for sure because of the country being still import dependent fair bit. So in terms of record level, we are now at the record level sort of reserves accumulation. This has all sort of significantly improved. Again, Ghana is over relying on gold and cocoa. Now, our biggest problem is that in all the years of Ghana being independent, or we almost like next year we're going to be 70, we literally haven't used our brains to do anything that contributes something to our GDP. If you look at this, gold, we basically is found on the ground. Cocoa, yes. Tetakwashi and the work that he did. Oil basically is found. We basically haven't done anything that is saying that, hey, we've gone through school, we have some of the smartest people on the continent, and we've used our brain to make something that we sell to the world. This is literally one of Ghana's biggest problems. Reform agenda and growth initiatives. So in terms of uh, some of these initiatives, we've been doing quite well in terms of when you look at the current ECF versus the system sort of program. We Ghana has literally been on the right path. When you look at the quantitative sort of performance, we're around 91%. So all of these means that the people running the country have done a fairly good job. So in terms of policy coordination and reform anchors, um, sometimes some of these things are mentioned in some of the budget, but actually does it actually feed through? We are yet to see. But I think one of the things we could do is give the people running the country a lot of credit. Um, and here are some of the policies. Okay, with safeguarding the debt sustainability angle of things, strengthening fiscal transparency and governance. The governance has always been some of Ghana's problems, which is the president and the party in power often have so much power that they will often do things unchecked. The question is whether the question of whether this could change or not is yet to be determined. Enhancing monetary and exchange rate frameworks. Again, they've done a fair bit of work on it, reinforcing financial sector stability. The way historically Ghana has looked at the financial sector, I don't believe was the right thing. They've often looked at profitability of the banks as a measure of the financial sector sort of doing well, whereas I believe the ability for them to lend to the real sector should be given a higher weight, because for the longest of time they've just essentially been giving the money to the government. Support economic diversification and inclusive growth. These are big terms, but when you look at our GDP makeup, we are not introducing new things into the GDP contribution bucket. Again, we've already seen here, we are basically ahead of target for basically almost all the things. So real GDP, non-oil, again, we've already gone through that. Um, Gold board has been one of the genius strokes of the country. Basically, again, I touched on this earlier that this is something that the rest of the continent will copy, which is if you have resources, owning more of it means that you can use to stabilize your currency. This has been it's basically been like a perfect trade where the moment we started capturing more of our informal sector gold prices hit all-time high. We're able to sort of use that to build our reserves. And it's a huge contributing factor in terms of why the country has been able to achieve what it's been able to achieve. Um, Again, big push being stated in a Accra Kumasi High Expressway. In fact, there's a famous saying from the Chinese guys who are just saying that if you want to develop, build roads. This is a flagship project. Um, Again, I sometimes don't agree with the way in which Ghana we do things. We have a huge amount of youth unemployment. If you look at what the guys at Burkina Faso and Sahel regions are doing, basically training their youth to go and construct their roads. I think something like that needs to be done in the country. But some of the huge expressway initiatives and the big push agenda, I believe, would lead through and feed through the construction side of the GDP contribution. So I expect that to be a net positive to GDP going forward. Again, um, it's a fair bit of work in terms of IPP and some of the renegotiation that the country has been able to do in terms of power being like a bottleneck. Again, power is something that I think the country needs to do a lot more exercise on. I believe the fourth industrial revolution, paying attention to solar, wind, and battery, would literally be a policy that the Ghana government adopts that would overbuild in terms of solar, wind, and battery capacity and be able to essentially attract global companies to come and set up shop in Ghana in order to basically hire a lot of Ghanaians. But I think the ability to pay or the work that they've done in paying about $500 million in terms of IPP debt was largely like positive. And and some of the work that they did. In fact, if you remember when they took power, there was like a huge concern that the previous administration had not even ordered enough fuel to keep the country's lights on, and they've been able to sort of manage all of that pretty well. And so that has to be something that we give them credit for. Growth is real. Diversification isn't. So we are going to do like a mini case study here in terms of some of the benchmark in the case, some of the things that we saw in Thailand, right? So Ghana in 1995, our our export was only 1.5 billion and almost entirely agriculture and gold, right? At the time, Thailand was around 6 billion. Again, also agriculture led at that point, right? The key point was that we were both at a point where we were relying on agriculture. But if you now go through that, um, gold at the time, 30 years later, gold now makes up a huge part of our. So this is 2023, right? The reason why it's 2023 is essentially we're using some external source data, which meant that we needed a bit more comparative sort of lens. Now, but the whole point is that cocoa that has been the main sort of contributor in the country's effects, we really have left cocoa to this the informal sector, right? The subsistence farmers doing it on small scale and then using cocoa board to sort of gather all of it. I'm so yet to see a farm that has maybe say 100,000 acres of cocoa and that has been well resourced and is producing that. Um, but then when you look at Thailand, several years they've now added vehicle, machinery, electronics, right? So if you now look at Thailand and their composition in terms of what is now the largest contributor of the GDP, they've literally added like several new sectors that are now larger and larger contributor to the country's GDP, right? Taiwan did the same. Singapore did the same. Um, any country that has been able to sort of develop properly have been able to add new sectors to their GDP. And this is the one thing that several sort of changes in government in Ghana we've not been able to do extremely well. Now, in terms of when we look at where we stand now, three commodities like literally contribute 78% of Ghana's GDP. Literally, this is just not good enough, right? We're still relying on things that, in fact, we're literally not, we haven't done anything with our brains to contribute to our GDP, except extract what is underneath the soil, right? And yet, when you see Ghanaians lead the shores of Ghana, we are some of the best workers in terms of any sectors that you put us in. This is literally a policy thing that needs to be realigned. Whereas when you look at what is happening in Thailand, literally electronics, machinery, vehicles, basically building cars over there, right? Now, like they've gone up at 1700x, and it is one thing that the successive government after successive government we've not been able to do. Now, I'm going to switch here quickly and show you this, where we can all I can share this thing so that anybody who's interested in this can sort of go out and play around it over time, right? So Harvard University compiled this thing together, right? So if you go back from 1960s, so the yellow being agriculture, um, and then there's been services, essentially MTN and the telcos, right? The other two being your metals and your minerals. We literally have not added any new thing to our GDP. We just relied on it. Now that compared to what the likes of Thailand has done. So if you go back in that time, what you will see is that you go in the 1990s or mid 90s, um, agriculture was like a fairly small part. And while it's grown, what they've done is they've added uh, like electronics, they've added machinery, they've added like vehicle manufacturing. So these things are part of industrial policies that the country really need to pay attention to. In fact, if you go all the way back, and I'm happy to share this website so that you can all go around and sort of play around in terms of how the country has been. What you see is that the composition of what makes up Ghana's GDP, um, really, services has been like basically telecommunication has been the only new sectors that was introduced. The rest of it has been your cocoa, you've had your minerals, and then oil was once oil was discovered, oil became a new thing. We've literally not used our brain, all the schools that we've gone to create anything that adds anything to our GDP. So that is something to really bear in mind. And this thing is often there, even in agriculture that we've been sort of talking about. If you go a little bit deeper, it's literally just cocoa, right? We've got a little bit of cashew, but you can't say I'm a cashew exporter when it's only like 172 million dollars. It's like that's peanuts, right? So in terms of agriculture, the policy isn't like we haven't targeted any real agricultural um, sort of sector that we could sort of say have a competitive advantage, and then back our various industries to go out there and execute. So with that in mind, I'm going to sort of wrap it up quickly. Here is what we think going ahead could happen. So the Middle East energy shock could be a real thing. I think most of the world are over-indexing on the fact that this could end quickly. I actually think that this could actually escalate at a much to the much wider region, and we're already seeing a bit of that. This has like a negative impact on inflation. Because of that, we could see an ongoing upwards pressure on inflation. 2027, 2028 GDP maturity wall. There is, a huge amount of bond that are going to be maturing on these two dates. Income fund has been established, and I think the current administration is working hard to make sure that the country can um, meet that objectives. I think the way we restructured it was not good at all. ICBC and remaining commercial claims of around 255 million. I think given the reserve that the country has built and a buffer, we should be able to absorb some of these things quite easily. Um, BOG, PPC technical deviation. Um, in essence, it's like we 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 are. I'm saying we are literally on the right path, but I think some of these things need to be tightened up. Then the global side of things, um, we have to be quite careful. So we're in a world where AI is a net positive, but actually it's being countered by geopolitics, right? And it is important for investors to really think these things through. Um, in the midst of a bit of panic, what you see is that there's a lot of opportunities for those who are well prepared. But overall, IMF sees global growth easing a little bit to around 3%. The slower world is a headwind for exports and financing conditions. So in terms of when you look at the budget, I think a lot of credit needs to be given to the current running sort of ruling party. They've done an excellent job. We should pay attention to the sectors and capital expenditure where it's being directed. We should pay attention to manufacturing, the industry sectors. Like it can't just be just gold being the main contributors of the industrial sectors of the GDP contribution. We should pay attention and retargeting specific industries to actually build that local champion that can compete in the world. South Korea did that. Um, Thailand did that. Vietnam did that. Indonesia has been doing it, right? And what they saw was they backed local companies that could compete globally, and then subsidize them to the point where they could stand by themselves, right? And those industries were industry that could hire a lot of the citizens, while at the same time making sure that they invested a lot in education. So with that in mind, I'm going to pause here and I'll take any questions that anybody might have. Danny, back to you. Daniel.
Hello. Thank you, AJ, for this insightful presentation. So please, if you have any questions, would like to take these questions and answer them for you. Learned a lot from this presentation, and I also believe that Ghana's progress so far has been impressive, with Q1 posting a real GDP growth of about 6.4%, and then inflation, although for the last 3 months we've been seeing it ticking up, it's still within the target bandwidth of BOG. And then again, one thing that stood out for me was the finance minister not asking for anything new and then keeping macroeconomic targets maintained.
Yes, I think what you've observed is that like in the last year and a half, there's been a lot of discipline, and they've been very very hesitant on coming to market to borrow more and more, right? Obviously, they've heavily relied on the T bills and the auctions for a lot of the funding activity, but I think the discipline has sort of help. And some of the policies that they've implemented had really yielded a lot of fruit. But yes, it's good observation and good comments. Guys, any questions or anything that like anybody?
So, any thoughts on the policy coordination instruments and how it would play out in the coming months? To would like to take any contributions from anyone who has something to say to.
Okay, it doesn't seem like there's any questions. That's fine. I think
Oh,
further work. I think further work
okay.
needs to go towards um, whether the country is actually targeting any specific sectors to try and build local and global champions, right? I think along that with investment in capex, so infrastructure work, um, and we should pay attention to the Volta corridor and the work that is being proposed to be done. The 24-hour economy, the specificity of what that means in terms of building local champions that can compete fairly around the world. I think investment needs to go towards reducing the cost of electricity. Currently, Ghana is very uncompetitive when you look at energy and electricity costs. And that is a function of the energy mix-up, right? So those areas are areas that I think we should all pay attention to and monitor over time. But with that, Mary, back to you and let's close it off.
All right, EG, thank you so much. And then also one last thing, like you mentioned, I think a GDP below 5% is a really big worry. Hence, we need to invest as a country in areas that drive growth. Then to bring this all to an end, we'd like to thank you for joining today's session. And we hope to see you next third Tuesday, which is August 2026. Thank you everyone for joining and thank you, AJ too. See you next time.